1. What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and as always, this video is powered by Investor Central Club. Use that code SUPERMAX20 to get 20% off your first month. But you're not here for that. You are here for the midday market update. Now, let me explain exactly what happened to your wallet today. You didn't go out and buy anything. You didn't YOLO options. Well, at least most of you didn't. You didn't even order DoorDash. And yet, somehow, you feel poorer, right? Well, that's because Americans are now spending $300 million more per day on gas than they were a month ago. Now, let's pause there. Not billion, but million per day. That's not inflation. That's what a subscription service looks like to suffering and poverty. So that's pretty much where we're at. Now, let's go ahead and connect the dots, because this is where most retail traders get cooked. And no, I'm not talking about like a medium rare steak. I'm talking like cooked, like you overcooked chicken and now it's dry. So, gas isn't going up randomly. Oil's up over 30% since the war started. The Strait of Hormuz basically clogged the artery of global oil. And now we've got missiles flying while politicians are tweeting peace talks. And here's the key line. We are still at war and it's not slowing down. So what does that mean? Well, it means oil doesn't care about your spy calls. It means oil is now the main character. And here's where it becomes a real market problem. Gas is what we call a non-negotiable expense. You can cancel Netflix, you can stop eating out and cook at home. But unless you start teleporting to work or become an ultra marathon runner, you're paying for gas. Every 1 cent increase in gas is equal to 3.75 million more spent daily. So when gas jumps like this, that's money not going into stocks, tech, Amazon carts, your favorite AI bubble play. Now, the next thing we're going to talk about is the Federal Reserve, because this is where things get a little spicy. Historically, the Fed tries to ignore oil shocks. They call it temporary. They pretend it'll go away like your ex. But in reality, that only works if inflation is already under control. And guess what? It is not in the slightest whatsoever. If oil stays high, it bleeds into everything. Transportation, food, goods, services, and suddenly temporary becomes, oh shit, we have a problem, right? Now let's talk about what the market is actually doing. We're seeing tech struggling, growth getting hit, and the market is just, whatever you want to call this today, is just running right now. So why? Because, well, we have higher oil, we have higher inflation, and fewer cuts are being put on the table. It's the most toxic chain reaction in markets right now. Now, Wall Street spent all of 2025 saying rate cuts are coming, and now Powell basically came out and said, yeah, about that. And that was what his press conference over the weekend really was hinting about. Now, this is where things get really interesting, because everyone thinks the AI trade is currently unstoppable, and fundamentally it still is. But right now, liquidity drives price. Rates drive liquidity. So if oil keeps inflation elevated, the Fed stays tighter, and suddenly even great companies go down. Look at MU, look at NVDA, right? NVDA, they can print perfect earnings, but if oil is screaming higher, the multiple gets compressed anyways. So it doesn't really matter what they report, because again, if oil continues to do what it does, we're going to see these high multiple stocks get crushed. So if you're trading this, here's what actually matters. Above $100 oil, that's the danger zone. And staying at elevated creates a macro problem across the board. The Fed tone Do they ignore oil, or do they start acknowledging the inflation risk? And supposedly there are talks of rate hikes coming, potentially, if we can't get inflation under control. Number 3 is consumer data. If spending is starting to slow, well, the market will start to show its butt crack. If gas is killing demand, that's also bearish. Number 4, the war headlines. De-escalation, that's a relief rally, which is what we might be saying today in the market, honestly, because we just saw SPY run, and it is just kind of chopping back and forth at this point, so it should be interesting to see what ends up happening here. And then escalation, well, we've been seeing that. That's just going to cause more volatility for us, right? So here's the reality nobody wants to say out loud. The market right now, it's not about earnings, it's not about AI, and it's not even about stocks. It's about oil, the Fed, and war. Everything else at this point is noise. So final thoughts here. If oil cools, the market, it's going to rip. If oil stays hot, you better respect the downside. Simple game, but very ugly rules. That's all I got for you today in today's mid-market update. If you enjoyed this, make sure you like, comment, subscribe. What are you trading this week? How did you do in your 0 days? And subscribe if you want real breakdowns without the CNBC nonsense and bias. And make sure you drop a comment. Are we heading higher, or is this the start of something bigger? Hope you guys have a great rest of your day, and I will catch you over on the stream.